And European stocks surged on Friday morning after news that the US and China have reached a phase one trade deal in principle, while the UK's ruling Conservative Party has won a commanding majority in the election. Let's take on the US-China trade deal development with Chelsea now. Hello, Chelsea. Good afternoon. Well, the US is expected to announce it will reduce tariffs on some Chinese goods on Friday as part of a phase one trade deal that could also include a pledge by China to buy more US agricultural goods. How are markets responded?
This has really been a boon for markets since the news broke yesterday. U.S. stocks closed at record highs on Thursday. Here, stocks in Europe are up the DAX is up about 1%. Euro stocks are up over 1%. So this has really been a big support for markets. But over the course of this morning, there has been some cold water thrown on these reports that the U.S. and China are close to this deal. So China has basically said nothing about a potential deal. They've been very coy about whether they are in agreement with the U.S. on this phase one deal. So I think investors are growing a little more cautious as the day goes on about whether China actually is going to support the deal that Trump has reportedly agreed to. I think investors are also going to be focusing on the longer term. So even if they do come to an agreement on a phase one deal, there's still a lot of uncertainty over the long term about what this is going to mean for future trade negotiations. So this was supposed to be a phase one deal of about 2 to 3 more phases of negotiations over the next couple of years. And that's where they're really supposed to address some of these bigger issues like technology transfers and state subsidies for Chinese firms. So they really haven't even gone to the really big issues in this trading relationship. So even if they do come to an agreement this week, it's really going to be a short-term relief for investors, and then the attention is going to turn to a phase two, which isn't going to be addressed until after the U.S. election in 2020, most likely. So we're still looking at potentially years of U.S.-China trade negotiations.
Okay, the EU leaders have agreed on a green deal that will cut the bloc's greenhouse gas emissions to zero by 2050. What could this mean for European economy?
It's really a potential groundbreaking change for the European economy. They're talking about really re-envisioning every sector of the European economy. So not only how energy is created, but also manufacturing, buildings, the auto sector. So it would really have a very broad economic impact. The EU is saying that this is actually going to be a really good thing, that this is going to be a driver of growth for the European economy over the next decades. But there is a lot of pushback, especially from the EU's poorer states. So especially in Eastern Europe, countries like Poland and the Czech Republic are saying this is going to cost a lot of money and we don't have the money to invest in these changes. So we've seen some of the political leaders of those countries asking for the EU to sort of help support them. The EU is saying that they would set aside about 100 billion euros to help with the transition away from things like coal and in those countries where a lot of Eastern European countries get most of their energy from coal and sort of energy sources that would not be acceptable under this deal. So the EU is setting aside money to help with the transition in those countries, but they're saying that's not enough. So it's still very early on in the negotiations of this deal, but it certainly is not going to have the economic impact would certainly impact countries in different ways and more difficult situation for the poorer countries in Europe.
All right, Germany's central bank has slashed its forecast for economic growth next year to about 0.6% from 1.2%. What's behind the dimmer outlook for Europe's largest economy?
Well, the German economy has been hit by a lot of global tensions outside of their own sort of purview. So the German economy is very export dependent. So it's been hit by the global trade slowdown driven in part by these Chinese-U.S. trade tensions. So that's been a real drag on the manufacturing sector, on the export sector. Germany is also struggling with a shift in the auto sector towards electric vehicles and new emission standards. So that's really weighing on growth in the auto sector as well. And all of this is really combining to have a pretty severe economic impact. So Germany just avoided a technical recession in the third quarter, but in the fourth quarter, the data we've seen over the past several weeks has been quite negative, especially in the manufacturing sector. Manufacturing growth is at its lowest level in 10 years. So all of these international headwinds are not really abating at this point. So the Bundesbank, this German central bank, is forecasting very low growth for the next several years, but they do expect growth to rebound by 2021, 2022.
All right, Chelsea, thank you very much. It's been a wonderful week with you. Enjoy the rest of the weekend. And shares in Asia jumped on Friday following news that Washington and Beijing have agreed to phase one trade deal in principle. Japanese stocks surged on the day. The Nikkei 225 gained 2.55%. Shares of index heavyweight fast trailing soared 4.39%. The Topix index added 1.59%. Hong Kong's Hang Seng Index also jumped 2.22%. Mainland Chinese stocks rose on the day, with the Shanghai Composite gaining 1.78% and the Shenzhen Composite gaining 1.48%. South Korea's Kospi also saw robust gains as it closed 1.54% higher. Shares in Australia also advanced as the S&P ASX 200 gained 0.46%. And when we come back after the break, we take a look at what has happened in South Africa this week as we bring you a wrap-up of that market. Do stay with us.